Hello, active traders. This is Ken Calhoun, president of the original Day Trading University, coming at you in this video episode for Live Trading Rooms Part 2. The first one was so popular, I thought I'd follow on with this additional strategy session to teach you some of the BS and scams to avoid when it comes to choosing a live trading room. Especially important to avoid, like a plague, those that would mislead traders by having you trade cheap under $10 stocks, usually on large size like 1,000 shares, to try and scalp out a dime or 15 cents. That's a recipe for failure. Ask for the P&L proof of any educator or live room operator that purports to be able to do that profitably, and you'll just hear crickets chirping. So without further ado, let's get underway with our session. In our last video episode, we said these are some of the things to look for in a live room, some of the good things that can help. You need to have specific long and short prices walked through live, well-explained entries and exits. So ahead of time where to get in and ahead of time where to get out, not after the fact, which is one of the BS shenanigans some of the people do. Is they will say, oh, I was long and I just made a fortune, I'm selling now. That's a load of horse manure. Third, moderator P&L proof that they trade. Make sure that they have broker P&Ls or DOMs that they actually trade. Make sure that you're learning from someone who's a well-known, credible industry expert. There's been a lot of self-styled young YouTube internet marketer wannabe gurus that have infested the trading landscape the last several years. A lot of times they'll buy fake YouTube views and make themselves pump up to look like they're all of that when they're not. Make sure that instead you're learning from people like myself who've been around for 15 or 20 years and are well-known and award-winning industry experts that are regularly published and have credibility, not these young guns who are just wannabe copycats who aren't the real thing and don't have industry credentials. Make sure that they illustrate clear chart patterns, not just some, text chit chat or whatnot. You need to be able to learn from the charts. That's one of the most valuable strategies in learning in a live room is live charts. And make sure that whoever you're learning from has testimonials in video from their traders that they've worked with. So that's one of the things we covered in the last one. And just to quickly recap before we get underway here, what to avoid in a live room. If there's obviously bad performance with a low percentage of winning alerts, or if they have a risky focus like under $10 stocks or E-minis only, that's also bad. If they fail to walk through step by step, that's bad. If it's just a talking head market analysis chit chat, that's not good. If they have very small, tiny, confusing charts, I don't know how people expect traders to follow that. It's tough enough to follow things on the internet in your monitor. If you have a very small chart that you're trying to teach people, that doesn't work either. So that's another red flag. After the fact, phony wins is another. And yet another one is room shills or fake members. There's some webinar interfaces that allow people, the unscrupulous, dishonest moderator, to put a bunch of fake members in, kind of like bots, B-O-T-S, bots or fake members, to pump it up and make it look like they've got hundreds of people when in fact they don't. So the other thing is shills, and these are people that are given free memberships in exchange for posting positive comments regularly saying, "Attaboy, you did great, I just paid off my house mortgage," kind of stuff. So beware of all these types of things. The cons, the dishonesty is rampant in the trading education industry, especially in the live room area. So let's get underway with part 2 here. Fool's gold. Two things. E-minis only, because E-minis are often too choppy. And for proof, let's take a look at, well, let's say today's charts, right? The E-mini futures. Futures are better. I would say futures are better than cheap stocks because at least the liquidity's there. So that's a plus. And the leverage. But the problem with E-minis only is unless you have a 2-day high or a rally market on Wall Street or a sell-off market, these things are too choppy and you're just going to die a death of 1,000 cuts like so many E-mini traders do who blow up their trading accounts wondering why they aren't doing well. It's because you're trading a bad instrument. And no amount of proprietary indicators, which are also a ripoff, by the way. Avoid any live room that tries to sell you proprietary indicators. That's another big source of income, and it's a ripoff because they're not consistent. So anyway, you just need price action and professional chart pattern recognition skills, but you don't want to try to trade instruments like E-minis. Why would you trade the ES when you could have traded, say, Seagate today instead? Thing went from 29 to 30 and a half, 1.5 point range. or JD going 21.40 to 22.40. If you're trying to trade the E-minis, that would have been a much tougher instrument to trade. So that's one reason I'm not keen on full-time E-mini day trading, though it does have its place, but that's only during rally and sell-off markets. That's true for spiders and diamonds and the Qs and any other index-tied instrument. They are only best well traded during strong markets. The other 80% of the market days that are choppy and sideways, you're just going to have a lesson in frustration and lost money. So don't trade index-tied instruments all the time. What we're going to cover today, though, is mainly the hazards of penny or cheap under $10 stocks. You may have seen Wolf on Wall Street movie. There's pump and dump schemes that abound online, and that's where a phony educator will sit there and say, go long 10,000 shares, not tell anybody, and then after he's got his order filled, make a big deal out of it and tell everybody it's running to the moon. Load up now. Next thing you know, we're going to make big ka-chings, and then they sell it into their sheep, the flock of people who have unwisely bought their live room membership in these cheap stock places, and then the traders are left, the bag holders at top, and then they take a huge loss while the chat room operator banks a profit. That's illegal, and it continues to be a problem in the trading industry. So make sure you realize that volume is your friend as a trader. So you should not be trading instruments with under 800,000 or a million shares daily volume. If it's anything less than 15,000 shares per minute, it's dangerous to trade because it's easily manipulated. Okay, and the other thing is, if you're trying to short, cheap stocks, oftentimes there's no borrows, no shares available to short, but magically the room operator seems to find them. It's all a big con. So make sure that you don't believe that. Let's take a look at a couple of charts, because I'm a trader. I can't stand to just look at the dang PowerPoint charts, the PowerPoint slides. Let's look at why cheap stocks are stupid to trade. Here's one, Sun, S-U-N-W. Okay, now this thing has a trading range of all of 20 cents. And yeah, if you had gone short 200,000 shares here, oh wait, there's not that many shares available on the whole trading day. But if you had been able to go short, 10,000 shares or something up here and cover here, you would have made 8 cents, right? 8 cents total on your 8 cents per share on the trade. That's not a good risk-reward ratio, and that type of chart is really stupid to trade. Another one I saw popular on some of these penny stock and cheap stock sites is Plug, another moron chart. Why in the world is anybody trading a chart that has a daily trading range of 8 cents? Epic fail. Bum, 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 bum. I mean, even if you did identify a cut pattern breakout, and even if you did get a fill, say $1.75, you could have made 3 cents. Wow. You'd have to trade extremely large size. One of the hazards that you'll learn if you've ever been to one of these false, phony, cheap stock, pump and dump type live trading rooms is that you have to trade, thousands of shares, and that's a bad idea because your risk-reward ratio is horrible. Here's another perfectly horrible chart, TWER. This thing has a range of all of 20 or 30 cents. Okay. Now, even if you'd executed a perfect short at the top and gotten a perfect cover down here for a 20-cent run, you would have had to trade, several thousand shares to make it worthwhile. And you would have gotten totally stopped out trying to trade it at all today. That's yesterday. It's the 2-day chart. It's yesterday. It's today. Anyway, it should be quite obvious to any thinking, intelligent person why these cheap, low-volume charts are a fool's gold bad bet. But unfortunately, there seems to be a lot of people who don't have much money, and so they use these overseas brokers, which, by the way, good luck with the IRS when you get audited for using an overseas non-U.S. broker. If you're here in the U.S., you would not want to do that because that goes under tax evasion litigation under the SEC and FTC and so forth, and under our tax and regulatory authorities. So do not use overseas brokers. That is a no-no. That's a tax evasion charge. And the other thing is don't trade these cheap stocks that don't have much range or much volume because they're easily manipulated and very difficult to trade. You'd have to thread the eye of the needle perfectly. I'm the industry's top, or one of the very top experts in stock day trading. I wouldn't touch these instruments with the 10-foot pole because the risk reward is bad. I mean, you could trade something like this with a 20-cent range or something like that with over a 1.5 range, right? Or nice gap continuations like RH, gapped up to 28.5, ran up to just under 30, and then pulled back. You at least got a shot at getting 50 or 60 cents out of the middle of the piece on these nice minor gap continuation charts, right? That's much easier to make money in my estimation, in my professional estimation, to potentially make money in these types of charts that are clean, well managed, high volume, sustainable breakouts than it is the cheap charts. Here's another one that one would not want to trade, or at least I would not be trading. Something like ENIA. The trend looks good, but you'd have to catch it exactly. Here it's a 902 or 904, go long 5 or 10,000 shares just to make a little tiny bit of money. And you'd have to be trading it all day long into the close. The opening range breakout links are no good. So, I just randomly pulled up a handful of under $10 stocks, but like this one, like SUNW or PLUG. Avoid charts like this is what I'm saying, because it's a sucker's bet. It's a long shot, and you're not going to make any money. Overall, you're going to lose. It's tough enough to make money as a professional trader. I could tell you trading nice, well-mannered charts like Valiant Pharma, VRX. I like this chart because it goes 23 to 24. It's got a 1-point range. So if I trade it tomorrow and I hit along at 23.8 or 24.25, I may well get 30 to 50 cents out of it. So that's good. Same thing with Seagate or JD. These are the types of charts that day traders should be focused on. Not these choppy as heck E-mini chop, 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 or stupid cheap, penny stocks or cheap stocks that are in the under $10 category. So I know there's a lot of these hustler, young gun, internet marketeers out there who aren't industry professionals and don't have any credentials, but they buy a lot of phony YouTube views and try and pump themselves up to be all of that, and they spend money on fancy websites, but ask for P&L proof they really trade. Ask for testimonials, video testimonials from their traders. Ask for proof that they've actually made money trading these types of choppy instruments. And the only way that they make money is by fleecing people who unsuspectingly buy into their live trading rooms. And even if they do get off a trade, it's because they've already bought it and they're selling to you after they issue a buy alert, right? And that's a pump and dump illegal scheme. So again, this is an unregulated, or a lot of unregulated activity, I should say, goes on in what should be regulated industries. So make sure that you are careful about whom you're learning from. Anybody that's teaching you good professional price action based breakout trading or pivot trades with nice, $20 to $50 share, $20 to $70 share, at least 1.5 daily trading range, at least 10 to 15,000 shares a minute, day tradable instruments. I'm the industry's top go-to guy for stock day trades. I run Day Trading University and have since the late 90s. You'd want to avoid stocks under $10 a share. You have my word on this. If my life depended on it, I would not be trading the $10 or cheaper stocks. I'd be trading what I do trade. It was just things in the $20 to $50 share range, on occasion up as high as $70 a share. Similarly, because of the spreads and the bad leverage, you don't want to trade stocks over 80 or $100 a share like Amazon or Priceline or Tesla or Netflix, because the risk reward is, the numbers don't add up for those. You're risking too much money to make your money. If you're trading something, I haven't looked at Apple yet today, but it's a $99 stock, and yeah, that's a nice breakout chart, but it's only a 1-point range on a $100 stock. Why would I pay $100 per share when for a fraction of that, for less than a third of the price, I can get a 1-point plus range and even 30% better volatility range on an instrument like Seagate that has a much better trading range? So that's a good, intelligent, step-by-step, honest approach to trading. Make sure that you're trading instruments that are actually likely to make you money, and not, these cheap junk charts that some of these young kids who in their 20s or early 30s or whatnot that don't know how to trade, then are just dishonestly taking money from people and doing that with things like room shills. Or I've even seen where they'll give away a free month of membership if somebody will go post a phony testimonial on some third-party review site. That's against the law, the endorsed testimonial rule from the FTC, but they're still doing it. So, buyer beware, especially in the trading industry. Make sure that you're trading instruments that make sense. So, just to recap, why you should avoid stocks under $10 a share. There's low float, the volume's too thin because you get spreads that are too wide, or it takes too long to get a fill. Front running by room moderators, also known as pump and dump scheme. That's where they'll buy it or short it before you get a fill, before they tell anyone. Behind the scenes, they'll go long 5,000 shares, and then they'll issue a buy alert and then be selling to you as you're buying into it, trusting them, when in fact they're selling to you as it's moving up as a direct result of their call. Just Google pump and dump, or boiler room operations. There's even been movies made about that, and they're doing it online with these chat rooms. So make sure you avoid that. Don't get taken in by the phony people out there. Cheap charts obviously have horribly choppy price action. It's an act of Congress to get it to go 30 cents, much less 60 cents in a row. Isn't going to happen on a $6 stock for the most part. So you don't want to trade those risky instruments because they don't have good odds of being successful for you. And it's your goal as a trader to make money, and you can only do that by trading good, high momentum, high volume, high volatility instruments that aren't priced too high, that are under $50 a share, but they're at least $15, $20 a share so that you've got enough volatility to work with. The cheap ones have opening range breakout moves that are too small for day trading, and to compensate for those teeny tiny ranges, what I've seen is some of these shysters are trying to encourage people to trade over 1,000 shares at once. That's insane. You're going to blow up your trading account if you try that. So I should know. I've blown up a couple trading accounts trying to do that back in the 90s, and I learned the hard way. I've lost the most money trading cheap stocks, and it's not because I'm a bad trader. I'm an industry expert. I'm a good trader, but the cheap stocks have the lowest odds. They're the worst instruments to trade. Just like trying to trade futures full time is a stupid thing. I like futures, by the way. I'll go on record as saying I do, because of liquidity, would favor futures over, any day over some cheap, crappy chart like SUNW, because the volume's no good in this, right? It's, a couple thousand shares every 5 or 10 minutes, and you're just gonna get, multi-penny spreads, and it's not, that's a much worse instrument to trade. So if you got to choose between the two, between penny stocks and futures, definitely you want to go with the E-minis. But the problem with trading E-minis full time is just look at the dang chart. They're too choppy most of the time, and you get these horrible patterns called expanding. You can Google it, expanding range breakouts. And I'm almost done here, but it's okay. That's where you get higher highs. It goes here, it's going, I'll go long. Oops, I don't think so. Okay, I'll go short. It's higher highs and lower lows, and it's kind of like a megaphone, and it takes out support and resistance and stops you out frequently. You go in long at new highs, get stopped out. You go short under cut pattern low, get stopped out on the reversal. Go, okay, I'll go long. It's running. And you get stopped out on the way down. I'll wait for a while. Okay, now it's finally going down. I'll get short. And then, oops, you get stopped out as it runs up. Then you go up here, finally breaks horizontal, etc. Expanding range breakouts. The default chart pattern for E-mini futures contracts, which is horrible for trading. I know some guy gave me some flack in one of my Saturday events saying, but you trade pivots in E-minis. And that's likely true. You'd have to. The problem is the pivot points aren't evident, and they are constantly shifting. The ranges are different. Look at the range on the 15th compared to the 18th. Much wider range on Friday than on Monday. Both are very horrible charts to trade. So, give me a nice clean breakout chart like this where it's much easier to make money with any day of the week. So anyway, that's some of the things, the food for thought when it comes to, at least my thoughts on this. So just say no. Just say no to trading cheap under $10 stocks unless you blow up your trading account. Now, there is one advantage. I like to interject a little humor. Now, it makes you sound much braver if you're, say, a young guy in your 20s and you're on a first date and you want to impress that co-ed, and you say, I was trading 5,000 shares of this, $1 stock or something. It sounds impressive. I was doing 10,000 shares of this stock today. Yeah, I'm a big trading muckety muck. I don't think so. But when it comes to trying to make money out of the markets, you're not going to hit it with the cheap stocks. You have my word on that. The cheap stocks are usually a death trap. They're hazardous. Even if you know what you're doing, for those of us who are industry pros, they're still much tougher to trade because they don't run as far once it starts to run. And so the instant you get in, you have to start thinking about your exit scalp. And even if you're using a level 2 box and doing 5 and 10,000 share scalps, that's a much, much riskier and more difficult, demanding way to trade than is simply trading nice, well-mannered $30 or $40 stocks that'll run a point or so on an open range day trading breakout, of which your goal should be to get 50 or 80 cents out of. That's a lot easier on a $20 stock than a $3 stock, right? So cheap stocks, particularly evil for day trades. Occasionally you'll get a winner, but those are usually offset by all the losses. So choose wisely. There's a path before you. Choose those instruments that are most likely to make you money. Anyway, I'd encourage you to try out my live room at tradingtheopen.com. I specialize in tape reading and 1-minute candlesticks, usually in the $20 to $50 share range. And most of what we cover is stocks and ETFs, mainly high velocity gap continuation stocks and bullish cup 2-day high breakout continuation stocks at Trading the Open. So since we're celebrating now 16 years in business, since the late 90s, I've been the trader's room of choice. So I hope to see you in Trading the Open. And before you try it, before you even try it, go look at my YouTube videos. I got lots of them that are captured from actual live room sessions, and you can get a sense of the professionalism. It's very much like a day trading professional seminar format with live alert examples and live entry and exit calls being made throughout the opening hour. So I run the room Tuesday, Wednesday, Thursday, first hour of the session, because that's the best momentum, highest velocity open range breakout time frame to trade the open. Hence the title of the room, Trading the Open. Anyway, so some food for thought. Anybody who's out there, question your guru, right? There's a, question your guru. If you're out there in some live room from some guy who's claiming to make all this kind of money trading $3 stocks or $6 stocks, ask him for a Schedule D tax return to show that he actually made money trading those and not just selling live room memberships or whatnot. Make sure that you're kind of cautious when it comes to whom you entrust your trading education with, and only learn from those of us who've been around for a while, not these young internet marketer kids who are on YouTube, because it's a lot of scam and foolishness and does not work. Ultimately, if you read all the reviews on these review sites, I've been reading them this last week, you see all these horror stories of people saying they lost thousands of dollars and they had their accounts blown up, and they tried to ask for explanations from the room moderators, and they just get banned from the room or deleted from the room, and a lot of dishonesty out there. So one of the things, remember, traders' friends, the 2 V's, volume and volatility. So volume of at least 15,000 shares per minute is absolute minimum, because you need to buy and sell with some decent liquidity so that there's some float and you can manage your order flow without a big slippage and a big spread to deal with, or slow entries and exits. So 15,000 shares a minute, volume and volatility of at least a 1 point or better daily trading range, and instruments in the $20 to $50 share range is the sweet spot for professional stock day trading. Anyway, this is Ken Calhoun. Best wishes for success in your trading, and I'll see you next time. Bye-bye.